Have you ever wondered why some big companies are buying tons of Bitcoin and Ethereum and holding them like treasure? Welcome back to Crypto Journal, where we decode the future of money, tech, and everything in between. Today, we're diving into something called Bitcoin and Ethereum Treasuries. What they are, how these companies make money, and whether you should invest in them instead of buying crypto yourself. Let's break it down. So first, what exactly is a crypto treasury? Think of it like this. Just like a company keeps cash in the bank, some companies now keep Bitcoin or Ethereum as part of their savings. Instead of holding dollars that lose value over time, they hold crypto, hoping it'll grow in value. That's what we mean by Bitcoin or Ethereum treasuries. It's basically a company saying, we trust crypto more than cash. Some of the biggest names are already doing this: MicroStrategy, Tesla, and Block, formerly Square. These companies buy and hold large amounts of Bitcoin or Ethereum on their balance sheets. They believe it's the future of money, and they're literally betting billions on it. So what do Bitcoin treasury companies actually do? In simple terms, they buy and hold Bitcoin or Ethereum, use it as a store of value, sometimes lend or stake it to earn extra income, and build financial products around crypto, like lending or mining services. In other words, they're like crypto banks, holding digital gold instead of paper money. Now, how do these companies make money? It's not magic, it's strategy. They profit when crypto prices rise, they lend or stake their holdings for interest, or when they raise money from investors and use it to buy more Bitcoin. For example, MicroStrategy has become famous for buying Bitcoin non-stop. They even issue new stock just to buy more. Their business is basically, we buy Bitcoin, we hold it, we wait. Now here's a big question. Is it better to buy Bitcoin directly or invest in a Bitcoin treasury company's stock? Well, both have pros and cons. If you buy Bitcoin yourself, you own the actual crypto. It's pure, direct, and can go up a lot. But it's also volatile, and you have to keep it safe. If you buy stock in a Bitcoin treasury company, it's easier, safer, and you can hold it in your normal brokerage account, but you're also trusting the company's management and business model. And here's the twist. If Bitcoin's price goes up 100%, these companies' stock might go up even more, because they're leveraged on Bitcoin's success. But if Bitcoin crashes, they can crash harder. So what are the risks? Overexposure. Their entire value depends on Bitcoin's price. Regulation. New laws could limit corporate crypto holdings. Volatility. Huge price swings can hurt their balance sheets. Liquidity. Selling massive amounts of crypto isn't always easy. Basically, they're riding the Bitcoin roller coaster. No seatbelts. The potential upside? Huge. These companies are early pioneers in the digital economy. They offer investors a way to profit from crypto's rise, without directly holding it. And as more governments and institutions move toward crypto, their value could skyrocket. Right now, the biggest players include MicroStrategy, holding over 200,000 Bitcoin, Tesla, Block, Square, Marathon Digital, and Coinbase. Each one has a different approach, but they're all betting that crypto will play a major role in the world's financial future. So to sum it up, Bitcoin treasury companies are turning crypto into a core part of corporate finance. They're blending Wall Street and blockchain, one coin at a time. Whether you invest in their stock or buy Bitcoin yourself depends on your risk tolerance. But one thing's for sure, the age of crypto corporations has officially begun. If you found this helpful, hit that like button, subscribe, and share this video, because the future of money isn't coming, it's already here.